economies. Herbert Stepic is CEO of Raiffeisen Bank, joins me live from the World Economic Forum in Vienna. Thank you so much for speaking to us. Welcome to the show. So, I mean, given your involvement and experience with the Vienna Initiative in 2009, I just want to ask you, from what you know and from your understanding and experience of that blueprint, could you apply it effectively to Greece's debt problems now?
As successful the Vienna Initiative was to bringing together decision makers and making them aware of the crisis and finding models to cure it, I fear it would be not the right model for tackling the Greek problem. This is a totally different ball game. It's embedded in the EU with all its decision-making bodies, so it needs another pattern of solution.
What do we need to see then if the Vienna-Style initiative, if that approach doesn't go far enough? What should happen instead?
I believe what should happen is happening at the moment. That means finance ministers are putting their heads together in order to find a solution for the Greek crisis. I believe that the stretching or bailing out mode and decision is by far the better one than risking a bankruptcy of the country. I think this is what the majority of the decision makers think. I also believe it won't be over in 2014. That means we need a much longer duration and stretching period. But at the same time, this decision hopefully will be made under the condition that the hopefully new and stricter regulations are being controlled and sanctioned in case any country that wants to be a member of the EMU doesn't adhere to it.
And are we now reaching a point where bondholders, those that actually own Greek debt, are going to have to make a substantial contribution to the support effort, as German Finance Minister Wolfgang Schäuble has outlined?
As I said today, I believe the capital market makes itself acquainted with a totally different situation, financing EMU countries. So the shield, at least for new issues, doesn't exist any longer, or will not exist any longer. I think that's a decision, if you ask me. At the same time, I don't see still a decision with regards to the old debt. Here I'm still strongly believing that we will have a continuation of the present ruling. So in other words, haircuts I won't see.
You don't envisage...
Yes?
Yeah, sorry to interrupt you. So, I mean, are you saying that is some sort of debt restructuring or reprofiling we keep hearing about, is that on the cards then for Greece?
This is what I hope. I'm not aware what is being discussed behind the scene, but what I'm pretty sure is that it won't be easy to sell a continuation of monies being sent to Greece without strict conditions. It won't be able to sell that to the taxpayers, wherever that is in EMU countries. So I think that the consequence is naturally strict adherence to much stricter rules and sanctions for the future.
And what do you think are the implications for contagion risks, for the borrowing costs for Ireland and Portugal, and particularly European banks as well, their exposure to the sovereign debt crisis?
Here, I think we very clearly have to differentiate the various countries. I think there is good chances for Ireland, Spain not to talk about. Portugal will need additional help. That goes without saying, but the countries, Portugal and Greece, from the size-wise, what the economies are concerned, that's still very much digestible for the rest of Europe, and therefore I'm a strong believer that the decision makers will not risk the entire system by letting one of the countries go bankrupt, but just try to stretch the loans and combine it with a sellable story to the average citizens that in the future that won't happen.
Yeah, they seem to be coming up against increasing political obstacles, don't they, Mr. Stepic? If I can finish off by asking you about the risk of Eurozone troubles in Greece and elsewhere, how concerned are you about the way this may impact Eastern Europe, the area that you obviously specialize in, you know, through the export channel or indeed through the banking channel, as we saw in 2009?
Frankly speaking, yes, the region is affected, but mainly by the business climate, and that's the biggest danger I see. With regards to the direct risk, that means that the Greece banks might fade out of the region, or we might have problems with payment. This is what I do not see. Already in the past, we have been able to take over customers from Greek banks that have put their feet on the brake with lending activities. So also here, I would say the potential of the existing banking industry in Central and Eastern European, specifically in Southeastern European countries, is big enough and potent enough in order to absorb a potential fading out of Greek banks.